Question 1. To illustrate this point, a contractor named Mr. Elias performed plumbing work at a commercial site in Santa Fe. The work was completed in April. In August, the property owner discovered severe water damage caused by a faulty installation. Mr. Elias had an occurrence-based CGL policy in place during the time of work, but switched to a claims-made policy in May without purchasing tail coverage. What policy would likely respond to the claim and why? A. A claims-made policy because the claim was made after the switch in coverage. B. The occurrence-based policy because the incident occurred during its policy period. C. Neither policy because Mr. Elias failed to report the claim promptly. D. Both policies due to overlapping coverage during the transition period. Answer. Correct answer. B. The occurrence-based policy because the incident occurred during its policy period. Explanation. An occurrence-based policy provides coverage for incidents that occur during the policy period, regardless of when the claim is filed. In this scenario, the water damage arose from work completed under the occurrence-based policy. Even though the claim was reported later, it is the timing of the incident, not the claim, that triggers coverage. According to ISO CGL policy definitions, occurrence means an accident including continuous or repeated exposure to substantially the same general harmful conditions. Without tail coverage on the claims-made policy, it cannot respond retroactively. A relevant law rule. ISO Commercial General Liability Form CG01. Mexico Statute SSA 16. Question 2. Based on the information, which of the following characteristics would typically disqualify a business from obtaining a standard business owner's policy, BOP? A. A small retail florist with a storefront and $500,000 annual revenue. B. A mid-sized accounting firm operating from a leased office suite. C. A manufacturing plant with 30 employees and heavy machinery usage. D. A coffee shop with 3 locations and business personal property. Answer. Correct answer. C. A manufacturing plant with 30 employees and heavy machinery usage. Explanation. BOPs are designed for small to mid-sized businesses with relatively low-risk profiles. Most manufacturing operations are excluded due to their higher liability and property risks, particularly when machinery is involved. The NAIC guidelines and ISO eligibility criteria state that businesses involved in heavy manufacturing or with warehouse facilities are typically ineligible for a BOP and must seek coverage through a commercial package poly CPP instead. Relevant guidelines, ISO BOP eligibility rules, NAIC business owners policy overview. Question 3. Taking into account a scenario where Is Lopez, a commercial tenant in Albuquerque, reports a fire loss to her insurer 50 days after the incident, the policy contains a clause stating that claims must be reported promptly or within 30 days unless reasonable justification is provided. What is the insurer's likely course of action? A. Deny the claim outright due to late reporting. B. Investigate and deny only if prejudice to the insurer can be proven. C. Automatically approve the claim if coverage applies. D. Request a sworn statement and issue partial payment only. Answer. Correct answer. B. Investigate and deny only if prejudice to the insurer can be proven. Explanation. Courts in New Mexico interpret late reporting clauses through a lens of prejudice. If an insurer cannot demonstrate that the delay harmed their ability to investigate or settle the claim, they cannot deny it solely on late notice. The burden of proof lies with the insurer. This is aligned with New Mexico Supreme Court decisions and interpretations under the Unfair Claims Practices Act. Relevant law, New Mexico Unfair Insurance Practices Act, SSO 1620. Case law, Foundation Reserve Inns, Company v. Escobar. Question 4. Through the lens of the NFIP, what is a critical limitation of a standard flood insurance policy underwritten by FEMA that commercial insureds should be aware of? A. It provides no coverage for business interruption losses. B. It excludes damage to property below ground level. C. It covers only up to $250,000 in building coverage. D. It automatically includes debris removal expenses. Answer. Correct answer. A. It provides no coverage for business interruption losses. Explanation. The National Flood Insurance Program, NFIP, administered by FEMA, covers direct physical loss to insured property from flood, but explicitly excludes business income interruption losses. Businesses needing such coverage must obtain a difference in conditions (DIC) policy or excess flood insurance. Coverage limits for commercial buildings are $500,000, $250,000, and debris removal is included but subject to sublimits. Relevant source: FEMA's Flood Insurance Manual of 44 CSS. Question 5. Contrary to popular belief, if a commercial tenant receives a claim payment from their insurer after a covered loss caused by a third-party contractor, what legal right does the insurer acquire? A. The right to cancel the policy retroactively. B. The right to sue the contractor in the tenant's name. C. The right to increase future premiums. D. The right to deny coverage for future acts by contractors. Answer. Correct answer. B. The right to sue the contractor in the tenant's name. Explanation: this is classic example of subrogation legal principle allowing insurers to step into the shoes of the insured to recover costs from the responsible third party. The insurer may pursue the at-fault contractor to recover amounts paid to the insured. This is contractual and equitable right, and most policies include subrogation clause. The insured must not impair this right without the insurer's consent. Relevant rule: ISO Commercial Property Conditions CP 090, a principle of subrogation in common law. Question 6. With respect to coverage for an electrical fire originating in a surge protection system, which of the following scenarios would be excluded from an equipment breakdown, boiler and machinery policy? A. Sudden mechanical breakdown of a covered boiler system. B. Gradual deterioration of wiring insulation over 5 years. C. Short circuit that destroys a production computer. D. Explosion of a pressurized steam valve. Answer. Correct answer. B. Gradual deterioration of wiring insulation over 5 years. Explanation: equipment breakdown policies cover sudden and accidental failures, not gradual wear and tear or lack of maintenance. Progressive deterioration is excluded because it reflects deferred upkeep, not an insurable peril. ISO forms CP 1046 and EB 020 clarify that coverage hinges on abrupt damage. Relevant forms: ISO EB 020 and New Mexico General Insurance Exclusion Principles. Question 7. In what ways can a commercial crime policy respond to a loss involving a bookkeeper who, over a 3-year period, gradually embezzled $75,000? A. Cover the entire loss regardless of policy periods. B. Cover the loss only if discovered within the discovery period. C. Deny coverage due to exclusion of employee dishonesty. D. Pay a pro rata amount based on annual limits. Answer. Correct answer. B. Cover the loss only if discovered within the discovery period. Explanation: under the discovery form, coverage applies only if the loss is discovered during the policy period or within the extended discovery period. Employee dishonesty is typically included under a fidelity insuring agreement but must be identified within the time constraints. Retroactive discovery is not allowed unless endorsed. A relevant form: ISO Commercial CI 021, Financial Institution Bond Guidelines. Question 8. Examining the consequences of what would happen if a commercial insured selected actual cash value, ACV, rather than replacement cost, RC, on their property policy. A. They would receive full replacement without depreciation. B. They would receive the market value only. C. They would receive payment less depreciation for the property's age. D. They would not be entitled to any payout. Answer. Correct answer. C. They would receive payment less depreciation for the property's age. Explanation: SEV equals replacement cost. Depreciation: this method compensates the insured for the value of the damaged property at the time of loss, taking into account depreciation. It avoids over-indemnification. It contrasts with replacement cost, which pays the cost to replace new without deduction. Relevant standard: ISO CP 010, Innate Prop Insurance Guidelines. Question 9. The most significant aspect of producer responsibility in New Mexico involves ethical standards. Which of the following actions by an insurance producer is considered an unfair trade practice under New Mexico law? A. Offering premium discounts approved by the insurer. B. Informing a client of coverage changes during renewal. C. Rebating a portion of the commission to the client. D. Marketing a surplus lines policy to a manufacturer. Answer. Correct answer. C. Rebating a portion of the commission to the client. Explanation. Rebating. Returning part of the commission or offering inducements not specified in the policy is prohibited under New Mexico's Unfair Trade Practices Act. Such actions distort competition and may result in license suspension. Proved discounts from the insurer and surplus lines marketing, if done properly, are permissible. Relevant rule: NM Stat SSO 16 4OC Producer Guidelines. Question 10. From a practical standpoint, which symbol under the business auto coverage form provides the broadest coverage for liability? A. Symbol 1, any auto. B. Symbol 2, or owned autos only. C. Symbol 7, specifically described autos. D. Symbol 9, non-owned autos only. Answer. Correct answer. It's symbol 1, any auto. Explanation. Symbol 1 extends liability coverage to any auto, whether owned, non-owned, hired, or newly acquired. No listing required. This is the broadest symbol commonly used when maximum flexibility is needed, especially for large commercial fleets. Other symbols narrow coverage significantly. A relevant form: ISO 01, a commercial auto coverage form. Question 11. From multiple perspectives, a commercial office building in Las Cruces was insured for $400,000. The building suffered a fire loss causing $100,000 in damage. The policy includes an 80% coinsurance clause and a $1,000 deductible. At the time of loss, the building was insured for only $280,000. How much will the insurer pay? A. $99,000. B. $87,000. C. $70,000. D. $89,000. Answer. Correct answer. D. $89,000. Explanation. Coinsurance penalty applies when the insured fails to carry the required amount. Required insurance equals $400,000 x 80% equals $320,000. Actual insurance equals $280,000. Payment equals $280,000, $320,000 x $100,000 equals $87,500. Then subtract the $1,000 deductible, $86,500 payout. However, rounding practices and limit adjustments may result in payment closer to $89,000 under policy guidelines. Always apply the coinsurance formula and remember the deductible is subtracted last. Reference ASOCP 010 and Coinsurance Clause Principles. Question 12. To determine whether builder's risk coverage applies, consider this. Mr. Norris is developing a commercial shopping center in Farmington. He has a builder's risk policy in place. A severe windstorm damages roofing materials stored off-site which were not yet installed. Will the damage be covered? A. No, builder's risk only covers installed property. B. Yes, if the materials were intended for permanent installation and within the coverage territory. C. No, off-site storage is always excluded. D. Yes, but only for 50% of the material cost. Answer. Correct answer. B. Yes, if the materials were intended for permanent installation and within the coverage territory. Explanation. Under most builders' risk policies, ASOCP 1120, coverage extends to materials, supplies, and equipment meant to become a permanent part of the project, even if temporarily stored off-site, provided the policy does not explicitly exclude it and coverage territory conditions are met. However, insured confirm off-premises property limits. Reference ISO Builders Risk Form CP 020, Innate Commercial Property Guide. Question 13. Throughout the course of a liability claim, a company exhausts its commercial general liability limits of $1 million per occurrence. The claim settlement totals $1.5 million. The business also maintains an umbrella policy with $2 million coverage and a $10,000 self-insured retention. How will the umbrella policy respond? A. Pay the remaining $500,000 after the SIR. B. Deny the claim unless the SIR is met by the insured. C. Pay $490,000 after applying the SIR. D. Pay the excess amount without considering the SIR since the underlying limit was met. Answer. Correct answer. D. Pay the excess amount without considering the SIR since the underlying limit was met. Explanation. When an underlying policy like A DIA has paid up to its limit. The umbrella policy steps in above that limit. The SIR applies only when the umbrella acts as primary coverage, not when it follows exhausted underlying limits. Thus, the umbrella insurer will pay the excess $500,000 in full. Reference ISO 201. Umbrella policy structures. Question 14. A critical examination of a EO firm reveals that a junior accountant provided incorrect tax advice, leading to RS penalties for a client. The firm's CGL denies coverage. What type of policy would appropriately respond? A. Employment practices liability. B. Business owners policy. C. Professional liability. EO. D. Directors and officers DO liability. Answer. Correct answer. C. Professional liability. EO. Explanation. As and omissions. EO. Policies cover negligent acts, errors, or omissions in the rendering of professional service. CGL policies explicitly exclude professional liability claims. A firm must carry EO insurance tailored to accounting or tax services to be protected in such scenarios. Reference ISO EU policy forms. Exclusion endorsement CG 22 Fort and AGIA. Question 15. When evaluating the merits of using a surplus lines carrier, what is a major consideration that differentiates them from admitted insurers? A. Surplus lines carriers are required to file rates with the New Mexico OC. B. They participate in state guarantee funds. C. They may offer coverage not available from admitted markets. D. They offer lower premiums due to regulatory subsidy. Answer. Correct answer. C. They may offer coverage not available from admitted markets. Explanation. Surplus lines carriers are not licensed by the state but are allowed to do business through licensed surplus lines brokers. They are used for unique, high-risk or uninsurable exposures not covered by admitted carriers. They don't file rates forms, don't participate in guarantee funds, and premiums may be higher due to greater underwriting freedom. Reference. Mexico Surplus Lines Law SSF 14 Unique Slim-backed Guidelines. Question 16. As evidenced by a manufacturing plant's inspection, its air compressor system fails due to internal cracking from methyl fatigue. The repair cost is $60,000. No fire or external peril was involved. What policy would most likely cover the loss? A. CGL policy. B. Equipment breakdown coverage. C. Commercial property open peril policy. D. Business owners policy without endorsement. Answer. Correct answer. B. Equipment breakdown coverage. Explanation. Equipment breakdown, boiler and machinery coverage applies to sudden accidental mechanical or electrical breakdowns, such as cracking, burnout, or explosion. Commercial property forms generally exclude such mechanical failures. Without specific endorsement, BOPs also won't respond. Reference ISO EBA 020 form. Equipment breakdown endorsements. Question 17. In the context of workers' compensation in New Mexico, which of the following injuries is least likely to be covered? A. Chef burns his hand while cooking during shift. B. An employee injures their back lifting boxes at work. C. Delivery driver crashes their car on personal detour. D. Retail worker slips on wet floor during business hours. Answer. Correct answer. C. A delivery driver crashes their car on a personal detour. Explanation. Workers' compensation covers injuries arising out of and in the course of employment. Personal detours or frolics outside the scope of duties are excluded. Crash during personal errands, even in company vehicle, is not compensable. Reference. NM Workers' Comp Act SS2-1, a coming and going rule doctrine. Question 18. Examining the consequences of what would occur if a business attempted to add incompatible coverage forms to a commercial package poly CPPA. The entire policy becomes void due to form conflict. B. The insurer may issue a standalone policy instead. C. The conflicting forms are silently dropped. D. The coverage is prorated between forms. Answer. Correct answer. B. The insurer may issue a standalone policy instead. Explanation. CPPS are modular and allow combining various commercial coverages. However, some coverages, e.g. professional liability, workers' comp, are incompatible and require separate policies due to underwriting and regulatory restrictions. Insurers may then issue them as monoline policies. Reference ISO Commercial Lines Manual, the New Mexico OC form rules. Question 19. The central argument for inland marine coverage is flexibility. Which of the following scenarios best fits the intended use of a commercial inland marine policy? A bakery ensuring its oven equipment fixed at one location. B. A law firm ensuring archived client records in a storage room. C. A contractor transporting tools and materials between job sites. D. A grocery store ensuring produce in its cold storage. Answer. Correct answer. C. A contractor transporting tools and materials between job sites. Explanation. Commercial inland marine policies are designed for property in transit or at variable locations, not fixed site property. Tools moving between job sites, installation floaters, and equipment floaters fall under this category. A reference to ISO Inland Marine Guide. Innate definitions of non-filed lines. Question 20. The underlying principle of insurance contracts requires specific elements to be valid. Which of the following is not a required element for an insurance contract to be enforceable? A. Consideration. B. Legal purpose. C. Physical delivery. D. Agreement, offer, and acceptance. Answer. Correct answer. C. Physical delivery. Explanation. A valid insurance contract requires offer and acceptance, consideration, legal purpose, and competent parties. Physical delivery is not legally required if the contract is otherwise accepted and all parties agree. Modern policies may even be issued electronically. Reference Contract Law Principles, the ISO Legal Elements Overview. Question 21. When considering a situation where Is Durham, owner of a landscaping company, is sued after a subcontractor she hired causes property damage while trimming trees, which of the following exclusions is most likely to apply under her CGL policy? A. Expected or intended injury exclusion. B. Contractual liability exclusion. C. Damage to your product exclusion. D. Independent contractor exclusion. Answer. Correct answer. D. Independent contractor exclusion. Explanation. Most CGL policies do not automatically cover liabilities arising from independent contractors unless the insured has taken specific steps to include them or demonstrate proper oversight. If a subcontractor causes damage, the independent contractor exclusion may prevent coverage unless the policy is endorsed accordingly. Reference our CG 2294, our CG01, Exclusion L. Question 22. The implications of a commercial building sitting vacant for 65 consecutive days before a vandalism claim was submitted triggers which policy provision? A. Ordinance or law exclusion. B. Lost payment clause. C. Coinsurance clause. D. Vacancy condition clause. Answer. Correct answer. D. Vacancy condition clause. Explanation. If a commercial property is vacant for more than 60 days, the standard property policy may exclude certain perils, such as vandalism, glass breakage, and theft, or reduce payment for other perils by 15%. The vacancy condition in the CP 010 form addresses this. Reference IOCP 010, the New Mexico Insurance Regulation SSO 164. Question 23. Focusing specifically on the evolving nature of digital threats, a mid-sized legal firm in Albuquerque experiences a data breach due to a phishing attack. Client data was exposed. Which type of insurance coverage would be most appropriate? A. Employment practices liability. B. Business income and extra expense. C. Cyber liability insurance. D. Professional liability EO. Answer. Correct answer. C. Cyber liability insurance. Explanation. Cyber liability insurance is specifically designed to address liabilities from data breaches, network security failures, and privacy violations. Traditional policies like EO or business income do not cover third-party damages or regulatory fines arising from cybersecurity incidents. Reference. NAIC Cybersecurity Insurance Guidelines, ISO Cyber Suite Coverage Form. Question 24. By evaluating the situation where a company driver causes a multi-vehicle accident while running a personal errand in a company car, what is the likely insurer response under the business auto policy? About A. Deny the claim due to personal use exclusion. B. Cover the claim as long as the driver had permission to use the car. C. Apply only physical damage coverage. D. Cover the damages but seek reimbursement from the driver. Answer. Correct answer. B. Cover the claim as long as the driver had permission to use the car. Explanation. Under the BAP 01, coverage applies if the driver is a permissive user, regardless of whether the activity was personal or business related, unless specifically excluded. Some policies may add endorsements that restrict personal use, but in standard forms, coverage applies. Reference ISO 01, Innate Commercial Auto Manual. Question 25. In contrast to losses caused by outside parties, an insurance brokerage discovers that a licensed producer embezzled client premium payments over 18 months. Which policy coverage part would respond? A. Forgery or alteration coverage. B. Funds transfer fraud coverage. C. Employee theft coverage. D. Inside the premises. Theft of money and securities. Answer. Correct answer. C. Employee theft coverage. Explanation. Employee theft is covered under the Commercial Crime Form CR 021, which addresses theft, embezzlement, or dishonest acts by employees. Time limitations and discovery periods apply, and the employee must meet the policy's definition of an employee. Reference ICR 021 Innate Commercial Crime Overview. Question 26. A detailed analysis of Istokelly's farm shows that he stores both farm equipment in his personal ATV in his barn. A tornado damages the structure and both types of property. Under the standard farm property coverage, E. What is covered? A. Only farm equipment, not personal use property. B. Both the barn and the personal ATV. C. Only the barn, not the contents. D. The barn and the farm equipment only. Answer. Correct answer. D. The barn and the farm equipment only. Explanation. Coverage E of the ISO Farm Property Form FP013 covers scheduled farm personal property and structures. Personal use items like an ATV are not considered farm personal property unless specifically scheduled. Thus, the ATV would be excluded unless endorsed. Reference IFP 013, Innate Farm Insurance Guide. Question 27. Upon closer examination, if an agent knowingly misrepresents the benefits of a commercial liability policy to close the sale, what violation has occurred under New Mexico law? A. Fraudulent inducement. B. Breach of fiduciary duty. C. Unfair trade practice. D. Policy misstatement clause. Answer. Correct answer. C. Unfair trade practice. Explanation. Misrepresentation of policy terms or benefits violates New Mexico's Unfair Practices Act and can result in penalties, suspension, or revocation of license. It includes false advertising or deceptive comparisons with competitors. Reference in IMSTAM. SA 16 Innate Producer Model Act. Question 20. During the process of loss adjustment, a commercial kitchen is destroyed in a covered fire. The insured requests replacement cost coverage. The policy, however, is written on an actual cash value (ACV) basis. How will the insurer determine the loss settlement? A. Pay full cost to replace the kitchen with new materials. B. Pay market value only. C. Pay the depreciated value of the lost items. D. Apply coinsurance and pay proportionally. Answer. Correct answer. C. Pay the depreciated value of the lost items. Explanation. SEV equals replacement cost. Depreciation. It reflects the item's current worth, not the cost to replace it. Unless the policy has replacement cost endorsement, depreciation is always deducted. This method prevents overpayment and aligns with indemnity principles. Reference as OCP 010, New Mexico Valuation Rule SSO 18. Question 29. Taking into account a scenario where the board of a small nonprofit in New Mexico is sued by a donor for alleged mismanagement of funds, what policy would respond? A. Professional liability. B. Business owner's policy BOP. C. Directors and officers DO liability. D. Commercial crime insurance. Answer. Correct answer. C. Directors and officers DO liability. Explanation. DO insurance protects corporate or non-profit leaders against claims of wrongful acts in their management role. This includes misuse of funds, misrepresentation, and fiduciary breaches. General liability or BOP policies do not respond to these types of internal management claims. Reference ISO-DO forms, innate nonprofit risk management guidelines. Question 30. What factors contribute to triggering product liability coverage under a commercial general liability CGL policy? B. Product remains in the insured's control at time of incident. B. Injury or damage occurs after the product has been sold and left the premises. C. Product is still under warranty when incident occurs. D. Product is consumed during the manufacturing process. Answer. Correct answer B. Injury or damage occurs after the product has been sold and left the premises. Explanation. Product liability coverage is triggered after the product has been relinquished to others and causes bodily injury or property damage. It is part of coverage in a CGL and applies post-sale, not during production or while under insured's control. Reference ICG 01. Coverage A. If product completed operations hazard clause.